What's good? Yo, yo. What's up, YouTube? This your boy Pursuit of Freedom over here. I just want to do a quick video on trading versus investing. Now, to go ahead and get these words out of the way right quick. Um, Investing, most people truly try to invest over the course of a lifetime, which is not a dumb strategy at all, because really it's just saving money, period. You know what I'm saying? And that is extremely important. Uh, enough said. You must save money, but it's hard to do if the cost of living for you is right at your income, or your cost of living is at or above your means. But when it comes to investing, just to stay on subject, most people invest putting in a little bit of money, check after check, week after week, month after month, year after year for 3 or 4 decades if you're blessed with that much life. And trading is not the opposite, but is a shorter term investment. Um, Not necessarily have to be a day trader, but you can swing trade. And what swing trade means is that you take an investment for a shorter period of time, maybe 2 days, or maybe 1 week, or 2 weeks, or maybe 1 month, or 2, 3 months. But you do not just follow the old adage of just buying, regardless of whether your investment is going up and down. Most investors are just buying. And this is something that's the one side of that everybody can do. Everybody can just buy if you got enough money to buy. So I maybe need to take that everybody out of there, right? But investing, like I just said, is continuous buying over the course of time, no real selling. And if I was going to give anybody any advice when it comes to investing, I always say to people that ask me any questions about what should they invest in, I tell people to buy, to invest where they already spend their money, to buy what you already buy. Um, and like I do all my shopping at Walmart, so yeah, I invest in Walmart. I keep Nikes on my feet, so yeah, I invest in Nike. I went and bought an iPad last year, so yeah, I invest in Apple. You know what I mean? You see what I'm getting at? Where you already spend your money is a good place to begin investing, because this is what you believe in already. You already put money in. Um, but there's one thing to point out though, man. Like in all honesty, you do have to have enough money to invest. There's some traders out there, some people believe that like everybody just all of a sudden got this money. You know, they might have came up in a family that had more money than the majority of people I think I'm really talking to. Uh, because ain't wasn't nothing given to me. My mommy and daddy couldn't put together 10,000, 20,000, 25,000, $50,000 for me to start my investment journey, right? But there's a lot of people out here that had those beginnings. You know what I mean? Just not a lot of people like me, right? Um, so yeah, man, good income is a part of this. It really is, because you cannot thoroughly invest on minimum wage income. But even if you got good income, you need to know the difference between assets and liabilities and start educating yourself on that. That is called financial literacy. And from there, I really want to just go ahead on and move on. Trading is truthfully capital management at its best. Any investment that you're willing to put your hard-earned money in, you better be willing to manage it yourself. Now, I ain't gonna never pay any sort of financial advisor to invest my money, because I can learn how to do this myself, and I'm going to work for it. So how you know that that financial advisor has your best interest at hand? If it's your first time tuning in, I'm gonna tell you to go back and watch that my introduction to my light and entertaining introduction to the stock market. And at the end of that video, 27 minutes, that might possibly change your life. But at the end of that video, I show an example of how you can crush what any financial advisor would do with your money. Um, and crush what the market is doing. Right now, the market is up like 1% on the year. And usually the market does about 10%. But let's just get into some examples. I'm going to exit the PowerPoint and get to what I mean. So yeah, like I'm showing you Nike. This is just 1 year, but I can go year by year and show you since 85. Let's break that down a little bit slower. You know what I'm saying? So Nike has had ups and downs. Nike has a history of doing 2-for-1 splits. So Nike will not allow their stock to increase to a massive number. So if you're an investor, is this a good investment or not? Being that Nike has a history of 2-to-1 splits when their stock price gets up. You know what I mean? Really to about a hundred and something dollars. They do a 2-for-1 split, bring the price all the way down here in this $40, $50 range and let the investments rebuild and then split again. You know what I'm saying? So you got to be a little careful with investments, because if you were investing down here and it got up to that, look in that box, you could be up 170 something percent. But if the stock splits again, you come back down. So you needed to sell or get out near one of these tops. That's called trading, and not just blindly investing for a lifetime. That's just one example. Like I said, also Walmart. Walmart is a company that has done great things, but I also see a couple of 2-for-1 splits in Walmart. So Walmart has not allowed itself to run up to $200 per share, $300, $400 per share. So sometimes just investing for the long haul, could be a bad thing. But in this case, a 2-for-1 split is not bad when you're going to be given an additional share. You're going to get 2 shares for every 1 share, right? So you're gaining a lot more share. Your share count doubles as the stock drops in price. Now that's a topic for another day. But the market is typically supposed to just be going up over the course of time. You know what I mean? And that's how it's supposed to work. It don't always work out like that. So I would encourage more people to trade stocks and not just blindly buy forever. You know what I'm saying? And then I want to give you another example in my own trading and investing. So this is everything that I'm holding. This is paper trading practice. So this is not real capital. And I have to tell you that there's some sort of glitch in my TC2000 software. As you see, 98% there, 100% there. I wouldn't be holding nothing that's down 100%. And to prove it to you, like it says Microsoft is down 100 and something percent. It tells you that I entered at $107. So let's look at Microsoft. Being that this is a PC, so I'm looking at Windows, I definitely would invest in Microsoft. Microsoft is up to 110. And they've done a bunch of these 2-for-1 splits in their past too. 3-for-2 split, 3-for-2 split. You know what I'm saying? So they've done a bunch of splits too. And that happens from time to time. But I want to trade because I want to lock in as much capital each and every chance I get, instead of just blindly investing, because you don't know when the company is going to do these splits and various different things that companies do when you're getting involved into the market at all. But just to show you right quick, in my trading, I made 10 trades for the last week of November. So November 26th to November the 30th, I've made 10 trades. Out of those 10 trades, I had 3 losers. I've already done the math on all of these trades. I'm 70% accurate through a time where the market is not at its best, but that's to the tune of $2,920. So I can grow capital. That I already know. I need more capital so that I can really begin growing some money. You know what I'm saying? But that's more so what I want to get at. You got Gainesville on the trading side, and you got Painville in the investing side. Says if you're not managing your investments can tick against you to the tune of massive amounts of money. Like, let's look at Apple for a second. I bought Apple at 186, but I bought Apple back in May, June-ish area. And this is what I want to talk to you about: managing your investments, vice versus just investing. See, I bought 10 shares of Apple back in May and June. And since then, it has risen, look at that box, 21% at its top. Not quite at the absolute top, but at its peak. And you can also look over here, and this will show you the gains that I could have locked in since I bought. So I could have sold and had a $500 increase in my money. But instead, I did what investors do. I'm in the process of testing both the investing strategy and trading strategies. So I held. I didn't continue to buy as this thing is dipping down, which I may do. I may add a few more shares in the dip because that can average down my price, right? Or I could have locked in gains up here to the tune of at least $445. That's what I mean by trading instead of just investing. See, when this thing started to pull back, I could have sold this position of just 10 shares and then watched Apple fall and then got back in with a possibility of it pushing back up to that high to get that box. And then I'll be up 30 something percent instead of just holding it forever and continuing to add. You know what I'm saying? So that's just getting at it in the basic sense, the difference between trading and investing and how just investing can have you short this $500. See, this position should be $500 bigger right now. I could have sold it up here, watched this fall off, and then added that $500 to this position size and bought a few more shares and be riding that back into Gainesville whenever it starts to come back up. That's all I want to bring to you, man. There is a difference between investing and trading, and on the trading side is where the money really lies, especially if you only got a few hundred to a few $1,000s. Now, if you got millions of dollars, billions, you got Warren Buffett type money, yeah, just invest and never sell because he's in love with Apple. But I believe he will sell off some of these shares if this thing takes too much of a dip. Um, but if you're trying to grow small money, trading is the best way to do that and not just investing. But investing is better than doing nothing. Hey, that's Pursuit of Freedom. I'll let you.